What is up, everybody? Dan again, Stocktrades.ca. Welcome back to the channel. In this week's video, I have a rock solid fund to go over. It's actually been one of the best performing funds in Canada, and nearly nobody has heard of it. It has assets under management of only around $17 million, which is absolutely absurd considering the performance of this fund. So that being said, let's dive right into the video and get into this ETF. So before we get started, as always, like, subscribe, comment, free subscriptions if you end up commenting that we randomly pick throughout the month. And with our No BS newsletter, it's even more important than ever to join it. We've got something massive coming on the ETF front over the next few months here in terms of a platform that is going to provide some of the most comprehensive research on exchange traded funds in the country, and you're not going to want to miss out, but you will if you do not sign up for the free newsletter in the description below. But let's get into it. So the ETF we're going to be going over today is the Horizons Big Data and Hardware ETF that trades under the ticker HBGD.TO. It does have a US dollar version, so you can buy this in US dollar currency if you'd like. Now, this fund seeks to replicate to the extent possible the performance of the Selective Big Data and Hardware Index. So this is a index fund. It's not an actively managed fund. And what the Big Data and Hardware Index aims to do is to track companies across the globe that focus on data development, storage, and management related services, as well as hardware and hardware related services used in data intensive applications such as blockchain. Now, when you think about it, what has absolutely exploded over the last few years here when we think of a post-pandemic environment? Well, there's two main things in general. First, cryptocurrency, Bitcoin, Ethereum. All of those cryptos have gone off the wall. They've been some of the best performing assets over the last decade or so. And more recently, it would be the AI boom. You have to think, this ETF focuses on data development, data storage, and management related services. A lot of the AI element right now, I mean, when we look to a company like NVIDIA's, and actually I'll go to our KPI tool here, and I'm going to show you something when it comes to NVIDIA, and you're going to get an idea of why this fund has done so well on the data storage element. Whoops, not Nuvei, we're going to NVIDIA. If we look to NVIDIA's data center revenue, look at this increase in data center revenue. When we go on a quarterly basis, we can get an idea of how fast it's truly growing. So this is why this fund has performed well on the Bitcoin front, the blockchain front, this data services revenue, which is what this ETF targets, and which, by the way, at Stocktrades Premium, you gain access to all these KPIs, a ton of company KPIs you can't really find anywhere else. You'd have to dig through the quarterly reports. We have a widget on the site here that provides them all. It saves me, I would predict, 10 to 15 hours a week in research, especially around quarterly earnings time. But anyways, back to the fund. This is the primary driver for the performance: AI and blockchain, crypto. In terms of overall fees, you'll pay 0.55%. If we go to the actual product sheet of the fund, you can see here that the management fee is 0.45. I'm guessing there is some sort of trading expense ratio in there that Horizons has maybe not mentioned on this quick sheet, but I'm inclined to believe that, you know, either the fee has gone down to 0.45% or there's a trading expense ratio that's making it a bit higher. As I mentioned, this is a very tiny ETF. It only has $17 million in assets under management. Considering the performance of this over the last while, I mean, as we can see up here, we'll get into it a little bit deeper, but since this fund's inception in 2018, it's returned 242%. It's nearly quadrupled the returns of the TSX index, and it's outperformed the S&P 500. But as mentioned, we'll get into that a bit later. Dividend yield of 0.64%. You're not really getting paid that much in terms of dividend. This is not going to be for yield seekers. This is going to be for total return investors who are looking to get some exposure to blockchain elements, AI elements, things like that, technology companies. It's definitely not going to be something you are going to be investing for the passive income for. Keep in mind that this fund does hold US and international companies, but it trades in Canadian dollars, which I've mentioned numerous times before. It means you will pay a withholding tax on the distribution, on the dividend portion of the distribution. Now, the distribution is so small, this is virtually a non-factor. I really don't think you're taking this into consideration very much. And I mean, I guess I should mention that this distribution or this withholding tax would have to be paid even inside of an RRSP, where a lot of investors actually think they can tax shelter Canadian domiciled ETFs that contain US stocks and ETFs. You cannot. You still will pay that withholding tax. So how expensive is this fund and what is the future outlook? Well, I'm going to tell you it's very expensive and the future outlook is very high. We can see that the fund has 53 total holdings and it has a forecasted price to earnings ratio of 33x. This is a very expensive fund. Now, the market generally rewards companies with higher earnings growth. So you're going to get a higher multiple if you're growing earnings at a faster pace. And when we look to the growth estimates of this fund, it's absurd, really. The forecasted 5-year earnings growth for this fund is 27.33%. So this would be an annualized earnings growth over the next 5 years. So they expect earnings to grow on average by 27.3% annually over the next 5 years. When we look to forecasted earnings growth, which would be next year's earnings growth, they expect this fund to grow its earnings on average, all the holdings inside of it by 47%. This is a huge earnings growth rate, and it is no doubt because of the big boom in AI and the big boom in blockchain. Because this fund hasn't been around very long, we don't have 10-year data on the risk, but if we go down to 3-year risk data, we can see that this fund is highly volatile. It's got a beta of 1.921, suggesting it's almost twice as volatile as the overall market. It has a max drawdown of 63%. Now, I'm going to predict that this was during the COVID-19 pandemic. And actually, when we head up here and look at this, no, it wasn't during the pandemic. It was actually from the market bubble at the top in 2019, November 2021, and the drawdown into 2023. That was the massive bear market in technology companies. But this fund is not going to be for the faint of heart, the risk averse. It's going to be very volatile, and it's shown that as of late. Now, when we look to the overall allocations of the fund, this is a 100% stock fund. There's no fixed income in it. There's no bonds. There's no nothing. And when we look to the overall geographical exposure, it contains very little Canadian exposure, only around 3.92%. But for the most part, you're looking at developed Asian markets and the US markets. You're looking at 70+% of the fund. Now, when we look to sector exposure, you're looking at pretty much financial companies and technology companies. There's going to be virtually nothing else in here. It says a little bit of real estate. I'm going to maybe think that this could be like a potential data center REIT or something like that. We'll look into it in the total holdings. And when we look to the overall market capitalization of the fund, this is a fund that's geared for growth. So for the most part, a lot of the focus is on small cap stocks. We look at 29 or 30% exposure to small caps. Then we have, probably 35 to mid caps and then the remainder to large caps. This is a very heavy allocation towards small cap companies and is one of the reasons why this is a very growth focused fund. Now, when we look to the top holdings of the fund, you're going to understand why this fund has performed so well. I mean, we look at Super Microcomputer. This company has gone absolutely off the rails over the last while. I mean, look at this chart. It's gone up when we look to, let's see, 1 year total performance. We're looking at 800% returns. So this is a company that focuses on cloud computing, data centers, big data, high performance computing, things like that. So the AI boom is an absolutely perfect example of why this company has gone up so much. I mean, it's dipped quite a bit since mid-March, and we're now filming this in mid-April, and it's gone down in price quite a bit. We're looking at prices of nearly $1,200 down to $900. So this is what I mean by this fund is going to be crazy volatile. And when we look at the valuations of something like Super Microcomputer, it's trading at 41x forward earnings. It's trading at a PEG ratio of 3.23, suggesting that this company needs much more growth than is currently priced into it. And overall, if we look to the other holdings, we're looking at Secura Internet, which is an international company, I'm guessing, ARM Holdings PLC, CleanSpark, Coinbase. So we have some crypto exposure in there. We're looking at Galaxy Digital Holdings, which is another Canadian-based cryptocurrency company. AMD, very popular company. NVIDIA, obviously. Although NVIDIA, we're not used to this. They're, the big player in the AI space, yet they only have around 2.64% allocation to this fund. So there's no doubt that a company like Supermicro has been the main driver of performance. And the number one thing that I want to explain when it comes to these ETFs and how beneficial they are is, for the most part, when people look at these top holdings, I mean, myself included, I've barely heard of any of these companies. And, it kind of goes to the point where you can either, if you want to invest in AI or take advantage of the AI boom, you can try to identify a single company you want to buy, or you can let a fund like this, which, it's an index fund that tracks, companies that specifically focus on this. You're kind of letting somebody else do the work for you, and as a result, you can buy all of these companies in the single click of a button. You get exposure to 50 plus AI companies, and you know what? You might get exposure to companies you would have completely missed, like Supermicro. Now, believe me, this was not a very well-known company prior to the big AI boom. I mean, it's worth $50 billion now, but it's also had to go up 900 some percent over the last year to make that happen. This is a main benefit of ETFs. You don't need to necessarily understand every single company inside of them, although it does help, especially a targeted lower total holding fund such as this. But overall, I mean, I'm not well versed in every single one of these companies, but I would almost guarantee there's a lot of quality in there that I may have missed if I decided to go the individual stock route when it comes to AI stocks. So this is one thing to consider with ETFs and why they're so beneficial to a lot of investors. Now, finally, let's go over the total returns of a fund like Horizons Big Data. So when we look to the fund's inception, it is around mid 2018. And when we look at this on a total return level basis, we can see that this fund has returned 242% since its inception. If we go to annualized values, this is around 23.61% annualized. You're not going to find a better fund in Canada has returned more than this. At least maybe there's a leveraged NASDAQ ETF that's performed better, but I'm strictly talking about a straight up ETF over the last, since mid 2018. There just hasn't been a better fund in the country, and I actually use the Y-Charts fund screener to actually identify this. It's the best performing one. Now, when we compare this to something like SPY, we can even see that it has demolished even a index fund that, there is no knocking the S&P 500's performance since 2018. It's put up 13.5% annualized returns. And when we look to the NASDAQ, it's put up even more. But the thing is, there's just nothing that can compare to this fund in Canada over the last, since its inception, so the last 6-7 years. And I mean, there was at one point, you can see that this thing is prone to bubble-like conditions. I mean, we look at the pandemic, when it went through the roof, high-value tech companies were trading at absurd valuations. The bear market in 2022 gave all that back pretty much. It started trading level with the indexes, and then the big AI boom definitely helped it out. It surged in performance again. When we look to the growth of $10,000, you can see that if you invested $10,000 in this fund during its inception in 2018, you'd have around $34,200, whereas on the indexes, you'd have, $20,000, $22,000. With the TSX, it would be even less than this. I'm not even going to chart it. It would be way less. So overall, how do I feel about this fund? I do like it. I know I did speak on the fact that, it's prone to bubble-like, valuation situations like we saw in 2021. I would say that the AI element of it is a little more permanent. Do I think this fund is overvalued? Probably. Do I feel that it's, kind of a market bubble like it was in 2021? Not necessarily. A lot of these AI companies are growing earnings and cash flows at an insane pace. And it's actually such an insane pace that it's hard for investors to comprehend, even myself, the increase in valuations in these companies. Valuation multiples have expanded, but cash flows have also expanded, pretty rapidly. Again, the fund is overvalued. only invest in this thing with money you're willing to not necessarily lose, because I think there's a lot of high quality companies in here that aren't necessarily going to be, you know, they're not going to go belly up or anything. I mean, we saw it. There was AMD in here, Nvidia, Taiwan Semiconductor, all those types of companies. But you have to be prepared for large drawdowns owning this fund. There's absolutely no question. Could it fall 50%? Sure. Could it fall 60, 70%? I would not put it out of the question. Could it go up another 100 or 200%? Absolutely. Especially if the AI environment continues to grow at the pace it is and the market sentiment continues to grow at the pace it is. I mean, to me, would I be chasing after individual AI companies or would I own an AI ETF? I would definitely go the ETF route, especially as valuations are much higher. You kind of risk, you know, putting your money on the wrong horse per se. If you're picking individual companies, and you could watch a broad-based, you know, AI index fund like this go up in value while you pick a loser and it goes down in value, and that would, you know, it just wouldn't really be all that good. I think it's a strong option for people who are looking for exposure to AI. But I just wanted to highlight the overall risks. If you're a risk-averse investor, I would say this fund is probably not for you at all. We saw the max drawdown, 63% If you're not willing to face this drawdown or even further, I would definitely, you know, highly consider whether or not this is right for you. This fund is right for you. It's a high quality fund. It does what it's supposed to do. It gives you exposure to AI companies, data center companies, things like that, blockchain companies. But just know the risks if you want to own it. So that's pretty much it for the video, everybody. Again, head down below. Join that No BS newsletter. We're going to be launching a massive ETF project here. You're not going to want to miss it. You're going to want to get in first. And in order to do that, you have to be signed up to the newsletter. It takes 2 seconds to sign up and it's absolutely free. We deliver it 2 times a week. You're going to get videos like this, stock commentary, market commentary, insights, case studies, anything you can think of. We deliver it to over 25,000 Canadians twice a week. And again, head down below, smash that like button, subscribe to the channel, comment down below. Every month I'm picking winners of premium subscriptions and you're not going to want to miss out. And again, we'll see you next time for more great Canadian videos.